Hello and good Monday morning to all of you. It's 2 o'clock on October 12th, and we are here to do another discussion for the COPEC Financial Wellness Daily program. Today we have Jill Spradlin, CPA, with RS Tax and Accounting joining us, and we're going to be talking a little bit about what's going on with current events. And every month we have Jill on so we can talk about what's going on regarding taxes and some of the legislature changes and things like that. So we'll get to that in a minute. First and foremost, I want to go ahead and make sure that everybody has a chance to review the disclosure. The disclosure is pretty straightforward. It talks about COPEC speakers, also affiliated companies. Those of us like myself that happen to be in leadership positions, and we also have our own companies on the side. We want to make sure that there is disclosure regarding that information, and you can see that in there, plus our own based on the board and my president of the COPEC board of directors. So wanted to make sure you had a chance to look that over. Today's program will be from 2 to 2:30. So for a half an hour, we're going to have a great discussion with Jill. And then from 2:30 to 3, if there's any additional questions or concerns, we will stick around as long as needed to have those discussions and questions and have you participate as much as possible. So we're going to go ahead and bring in Jill. And I noticed here we got the wrong title there, Jill, so my apologies. I'll go ahead and fix that while we're working on this. But what we'll do is we'll get back to the original topic, and I'll start here. Again, current events, monthly tax discussion. So you've been busy, I know, this year with a lot of the tax law changes. We talked a little bit last time about the CARES Act and the Secure Act and some of the changes with PPP and all that stuff's going on. What do you have in store for us today that we're going to review and hopefully get some people updated on?
Well, I was just going to point out that a lot of people this time of year, they're into football or they even start thinking about the holidays, but we all know it as tax planning season. We have a number of clients that will come in October and November to discuss their situation, which is a really, really good move, especially if you've had any changes or any unusual things going on. It's the season of people are getting bonuses or not getting bonuses they thought they were. I had a gal the other day who was started a new job last March and got laid off on the first day. Oh. And she's been receiving unemployment ever since. It's going to be to the tune of over $30,000. Did not know it was taxable. Unemployment is taxable. So if they're not withholding from that benefit or that payment, you need to make estimated tax payments on that. So that's the kind of thing it's better to find out sooner rather than later in April when you're not expecting it.
Right.
There's only 11 weeks left until the end of the year, so it's closer than we think. We're well into the third quarter now. And if you're going to make any tax moves, you need to be thinking about them now. So
you bring up a really good point. This is tax planning season. A lot of people think, wait till you get your reports, right? At the end of January, early February. Hey, I've got my information. Okay, CPA or okay, whoever I work with, what can I do to help lower my tax liability? It's too late at that point, right? I mean, maybe there's some things you can do, like maybe you can do some contributions before you file to certain retirement plans and things like that. But for a lot of things, it's too late. You really need to think about that stuff now and get them done before the end of the year, right?
You're right. We've got a lot of farmers or business people will review things to see if a purchase they're considering anyway, maybe a larger dollar equipment or something, would it be more beneficial to do it before the year is out or to defer it till next year? You kind of have to do tax planning always in tandem between 2 years at least, if not more, considering what might the future year look like. Would you need a deduction maybe more then than you do this year even? It's especially I would say especially important this year to consider timing of things with so much that's going on, and it's impacted business revenues and personal job income so much. And things are just very unsure, both in terms of what's going to happen with individual situations and the economy and so on, but also with the election, what tax laws are going to look like next year. So to a certain extent, that that adds a layer of complication that's not there every year. So.
Right.
So it's more important than ever, I think, to try to think about some things early where you can still make the moves. Like you said, there are some things you can do before you file, but the majority of tax moves you can make that are going to have any real impact need to be done before the year ends.
And really those year-end planning, they really are usually part of a bigger plan. Like I know in wealth management, you might want to take some gains or some losses to offset other gains or losses, you know, things of that nature. But you're not letting that tail wag the dog. You really need to, I mean, you need to look at your sometimes bigger plans that you may have, but you need to make those adjustments before the end of the year many times, and then other things can be done to tax season. So for those that are listening, again, you got a bigger plan, decisions by the end of the year, each year, and then obviously final decisions by April or October when those are, when you have to have those final returns done.
Right. There are some things to take advantage of now too. There are certain credits and things that you need to think about whether they're going to be available necessarily in future years. So that can drive your decision to go ahead and maybe make a move where you can take a tax credit that may or may not continue.
So can you give an example of one of those?
Let's see. There are, right now you can take bonus depreciation going back a couple years that you weren't permitted to before. There are some things there's deferral of payroll taxes that are allowed by the CARES Act that can free up cash flow, but they do push the deduction and the payment of the taxes for the employer into next year.
Okay.
That needs to be analyzed. Is that a good idea for us or not? You know, yes, it provides some liquidity, but there's other considerations as well.
Right.
Maybe you don't really need the deduction this year if you've been impacted by the COVID situation. This speaking of business, small business generally, but
would you?
Are other provisions that are, you can make the assumption that they're going to be extended, but we don't know that for sure. So.
Would you say there's a lot of people that miss tax benefits that they're eligible for because they may not look into it, or they may have missed it? It might have been for only a couple years, and then it grandfathered, then they come and ask about it and it already passed. Mm-hmm. Would you say that's a pretty high percentage of people that miss those types of things?
Yes. We've seen people that took some of the college credits when a child in high school started taking some college courses and took a small credit and bumped themselves out of 1 year of the full American Opportunity Credit, which can total $2,500.
Right.
They took it for a very small amount, and then too much time has passed. By the time they discover this 3 or 4 years down the line, they can't amend the year that they took, that they wish they had not taken it. I've seen people that, employers and businesses that aren't even aware of certain things that they qualify for. And again, this year with the additional legislation for CARES Act, Secure Act, and whatever else they come up with, creates even more gray areas that, or opportunities that need to be looked at before the end of the year if you're going to try to take advantage of them. So.
Right. And again, many of these, if you go back and you look at previous tax returns, you can't catch these up to a certain period of time for a number of them.
Right.
So
for instance,
the year's gone,
don't go back 3 years.
Yeah.
And they allowed the carryback with COVID. They allowed the carryback of net operating losses to get immediate refunds from prior years, where before that it was carry forward only. So they did some of those things deliberately to try to put some more cash in people's hands. And if a taxpayer is not even aware of it, it's not doing them any good. Then if there's a benefit, but it's not been well publicized, the taxpayers, it's hard for someone who has other things to do to keep up with all the things, tax changes and so on. So it's a good idea. It is a good idea if you've had any impact from the COVID situation or other changes in your life or in your business, to meet with your tax preparer in this time of year and discuss things, both for the year end 2020 and then future years, like you said.
Yeah, and you mentioned our industry. I mean, we obviously deal with a lot of people who are trying to make decisions on their planning or their investments or whatever that might be. And I don't believe they do enough in consideration of these tax benefits and the tax planning strategies that you can put in play to maximize. And people always, worry about things like the age 59.5%, 59% penalty, which is important. It's really critical. These things, but it's the things that they didn't know that they could have got, or they could have done, that betters their situation. It's not the dollar you dropped, it's the dollar you failed to be able to pick up, right? And so that people bring these all together and make sure that they're looked at on a regular basis to
I've tried to encourage clients to talk to us before they make a big move. I've had more than one client that pulled lots of money out of 401ks to purchase a home. They didn't want to have a mortgage, triggering a huge tax bill plus the early withdrawal penalty needlessly, when they could have gotten a 3% mortgage.
Yeah, and managing our expectations and managing our comfort level is a tough thing. When, just like you said right there, I feel comfortable having the mortgage paid off, but they have no idea the ramifications and the cost that they put on a burden for their long-term financial stability.
You can usually overcome their philosophical objection if you start showing them some big numbers.
Yeah, exactly right. It's always funny how if you say a percentage or a small here and a small here, but you add all that stuff up, you're absolutely right. It's impactful. What else is going on out there in the industry that you're talking to your clients about?
Well, they're talking about, various candidates talk about student loan debt, waiver of that, increases or decreases in tax rates. I think our common consensus is it's probably as low as it's going to get. Realistically speaking, I would think that all of this government spending they've had to do is going to have to be funded at some point. So my guess would be sooner or later rates will rise, and that's something to keep in mind with your overall planning. There's some great estate tax breaks that are there right now. If somebody's doing estate planning, it may make sense to transfer properties and things now rather than later, or not. It depends on your individual situation and the details of that. We've talked to a lot of farmers are having down year after down year, and so their situation has gone from trying to shield income from taxes to possibly considering income averaging to go recoup some of the tax paid in a couple of the prior more higher income years, and they're permitted to average across 3 years. So they're farmers and fishermen, I think, are about the only people now who are permitted to do that. And it's because their income is so volatile. So a lot of our clients out in the west of Columbus have been impacted by that.
That's an interesting thought process. I think we're so conditioned, and I would argue that probably 80% of the the time this case is true, which is you're almost always better off deferring taxes and taking tax breaks immediately. I mean, in many situations, that is true. Obviously, there's schools of thought, or there is logical explanation, just like you mentioned. There is, you believe this is the lowest taxes are going to be, or you're younger, or whatever it might be. You may be in a situation where you actually want to aggressively pay the taxes today. Maybe, as an example, of a couple of things. A younger person, right, long-term, putting money into a Roth. Well, pay the taxes because of the benefits. Maybe somebody later where they're older than 59 and a half, they've retired, but their taxes are really low right now, but they have a lot of money in a retirement plan, and they're going to have a big tax bill when the RMDs kick in.
Yeah.
Or even something like right now, Roth conversions. You might be able to throw those things in there where you, at a low tax bracket, you convert some of your IRA to a Roth. You know, there's a lot of these strategies where, wow, maybe paying taxes, or even, let's throw this one out there, even somebody who did lose their job partially through this year, and they're unable to get a replacement in this year. While a difficult process to go through, that does, though, give you the opportunity to take advantage, for those that can, of the low bracket that they're in temporarily before they then get back on a full salary again, maybe at the end of this year or into next year.
Right.
So talking to somebody like you, or somebody that can give them that advice, sometimes it's okay to pay taxes because you're thinking it's going to be at a better place than what it might be in a couple of years.
We ran into that actually in the 2008-2009 cycle as well, where in some cases, because income was so depressed, they did make a move and withdrew money that was taxed at a much lower rate than it would have been subsequently. Yeah.
Which is needless to say for most people, again, deferring long-term for retirement. That's what the ultimate goal is. But sometimes, you know, there's the outliers where logic just says, take advantage of those low brackets for the moment you have them.
Yeah, the people who are hurt worst by that double whammy were the ones who lost a job and were forced to withdraw funds from a retirement account right when it was down. So,
yeah, exactly.
So that was really too bad. So that's not quite the case right now. But for instance, you are allowed to skip your required minimum distribution this year. We've had a number of inquiries about that, and we're like, hey, if you can do it and, you know, maintain your standard of living, go for it, because it's almost always better to leave that money in there longer.
Exactly right. And you just said something right there that just really, you know, one of our financial coaches, Rick, we do programs every other week, I think, regarding budgeting and things like that. And you bring up a really good point. This is why it's important for everybody to look at all their things together, because you brought up the point, what is a double whammy? Not only do you have to pay taxes, maybe a penalty, but you also are selling off investments at a loss potentially to cover those needs, which is why it's so important that everybody make sure they have a balanced approach, things like emergency funds that are there so you don't have to pay penalties and pay extra taxes and pay or sell off at losses, and how these all work together. So,
right, because clearly the thing to be doing in 2008, 2009 was buying.
Yeah, exactly right. Exactly. But I like the idea of people understanding that these things work together. What you do taxes has an impact on what you might do legally, or what might you do with your investments, your planning, and it really brings it together.
And the only numbers that really matter are the after-tax numbers.
Exactly.
They're the real numbers.
And that's a really good point. People sometimes misconstrue certain things where you may have one person who is, let's just say, is a millionaire. Well, I'm a millionaire. Well, okay, if I'm a millionaire, but it's in after-tax dollars in investments or a bank account, that is completely different than somebody else saying, I'm a millionaire, but they're at a really high tax bracket and it's all in tax-deferred vehicles yet to be taxed. So one person is a millionaire after tax. They can spend $1 million. The other person, if they don't do it properly on their distribution planning, they could, I mean, that $1 million may only be worth 650 or 700.
Right, that's a great point.
Very easily.
That's a great point. Another way is with, like you said, the current value, but also the liquidity. I'd rather have $1 million in the bank than $1 million worth of land or $1 million of Coca-Cola stock, because it's so volatile. And the chances that you're going to have an up or a down year right at the time you're needing to liquidate some of that is fairly high. So, as you guys know, with your planning and everything, the closer you get to like a retirement age, the less volatile you want things to be. We encourage people that are like real young. I'm sure you've seen the statistics. If you contribute the max to an IRA for 10 years between 20 and 30 and never contribute another dime, you'll have more than the person who starts at 30 and contributes to 65. Young people, somebody in their 20s, they want to spend Starbucks every day or something. They're paying $1,000 for that Starbucks.
Right.
So we try to show things in a certain way to think about them in a different way a little bit, so that they put it into context. Do I really want to spend $25 today, or if I put it back, it will literally be $1,000 when I'm 55. So
Exactly.
they don't believe you at first.
Right. And those are good things too, because we're trying really hard with this COPEC Financial Wellness Initiative to help people learn these things. But, it may be a distant second to parents sharing some of these concepts with their kids at an early enough age, so that they can start thinking of these things as well.
Well, sometimes it's good to have it come from a non-parent too.
That's true too.
like so many other things.
Yeah, I can honestly say that I probably heard somebody else louder than my parents after 30 times or something. But
you're not the first.
Yeah, right.
It's helpful. It's real. The schools don't really teach much in the way of financial management. I'm not saying it's their job to, but the average high school, I don't think, does much of that. If somebody's lucky enough to get in a junior achievement or some kind of economics course, that's helpful, but you're at a disadvantage if you don't know some of these things, and there is no structured way that people are educated on this. So what COPEC is doing is, terrific, I think. Any place people can go to get some basic information that they may or may not have gotten from their family.
Yeah, and just notice we're at 2:28 here, so we got 2 more minutes. Boy, time flies fast, doesn't it, Jill?
When you're having fun.
Yeah. So, obviously this is real important for us to bring some of the common current event issues that we're bringing. Anything else you want to wrap up with thoughts, concepts?
No, I'm looking forward to doing a show as soon as if they come up with another stimulus program, that's going to need a lot of publication very quickly for people to take advantage of that. I will comment that the time is drawing near now for the companies that took PPP loans to be filling out their forgiveness applications. For that, there's a new streamlined, simplified application available that most recipients can use, and those are turned into your lender.
And they're eligible to do that now?
Yes.
Okay.
Yes, the time frame was moved to 24 weeks after the distribution, and a lot of people are coming up on that right now.
And this is important for those of you that are listening and you hear this. If there is a big tax law change, make sure you check out Jill's next program on current events like this, so we can try to get that, whatever's happening, get it in layman's terms so people can understand it. And then also, if there's some groundbreaking changes that are coming out there, we may actually do some special programs to get that information out. So please make sure you sign up for the newsletter. We'll make announcements. And Jill, I know that you're doing regular programs every other week. Thank you very much for sharing your expertise with us. And we'll go ahead and see everybody tomorrow. And Jill, we'll see you in a couple weeks, I'm sure.
Great. Thanks, Jay.
Thanks a lot. And everybody have a great day. And we'll see everybody tomorrow. Take care.
All right.